Hey guys, how are you? Abel Tejeda with The Mortgage Guys. And today I want to talk to you guys about the $1 million question when buying a house. Do you need to come in with 20% down to be able to buy? And the answer to that question is definitely no. It's not even close. There are a lot of different options. For example, FHA. FHA only requires 3.5% down. That translates into $3,500 per every 100,000. So just do the math. A lot of times people don't like buying with an FHA because you need to pay mortgage insurance. But in reality, honestly, it's a great loan. It's basically a government loan or guaranteed by a government entity where they allow you to come in with 3.5% down. That is what's considered the first-time homebuyer program. It has pros and cons. I don't want to get into those right now. If you want to have a conversation with me, I can go over all of that. Just set up an appointment at the end. I will give you my phone number. But that's FHA. Now, VA, if you're in the military, you don't need to come in with anything as form of down payment. What people say, if you've never used it, and this is something that blows my mind that they don't tell our military people while they're in the military about all the benefits that they have. They literally, if you're VA, if you're enlisted, if you're currently serving our country, you can go in 100% financing. There will be closing costs involved, but we can always work with you between the lender, the realtor, the seller. We can put together credits for you to literally come in with zero money out of pocket. And the same goes for FHA offers or people that are coming with 3.5% down. But let's say you definitely don't want the FHA after I tell you the pros and cons of that loan. You tell me, you know what, Abel, definitely not. I have 750 FICO. I have 5% down. What should I do? At that point, just go with a conventional. With 5% down, in my opinion, is one of the best ways to buy a house, just because you're able to lock down a really good interest rate at the moment. Just because a loan is a conventional loan, it doesn't mean that it doesn't have mortgage insurance or MI or PMI. It just acts differently in the way you can remove it. For example, with FHA, you're stuck with the mortgage insurance for the life of your loan. Before you were able to remove it, now you can't. But with a conventional, once you go in with 5% down and then the property appreciates another 15, now you have 20% equity to be able to remove the mortgage insurance. And I think that's where the misconception comes in about needing 20% down to buy a house. But in reality, it's just 20% to not pay mortgage insurance. But with a conventional, the cool thing about it is that once your property appreciates, you could just do a drive-by appraisal, send it to your mortgage insurance company, and they'll remove it. Basically, you'll get a lower down payment just by removing that mortgage insurance that a lot of times is half a point. With FHA's 0.8. I don't want to get into the details of it, but give me a call. Give me a call, 619-948-2996, or send me a message, and let's see what makes the most sense for you. That's the thing with mortgages. It's not a one-size-fits-all. Just because your brother bought a house with an FHA doesn't mean that it's the best for you, or vice versa. Let's say they bought it with a conventional, so you should get a conventional. That's not necessarily the case. Every single one of these loans works differently. So give me a call and I'll break everything down for you. Once again, 619-948-2996. Thank you.